Hey everybody, Ace here. If you're just starting to invest, there is a lot of different terminology out there that you might not know what it is. So I'm going to go over 10 basic investing terms that you need to know before you start investing. Starting off with the bear market. What is the bear market? The bear market is when the market is going down, or there is a downward trend in the stock market. And people who say the market is going to be going down, they're considered to be called a bear. Second is a bull market. What is a bull market? Well, you might think a bull market something like this. But that's not a bull market. A bull market is when the stock market is rising, or it has an upward trend. And people who say the stock market's going to go up or continue to climb are technically referred to as bulls. I myself am a bull. I think no matter what, the stock market will go up over the next coming years, whether that be 5 or 25. I am always thinking the stock market's going to go up, so I will continue to invest in it. Next is blue chip. You might hear reporters or people talk about blue chip stocks. What is blue chip stocks? Well, blue chip stocks are typically companies that have good balance sheets, profitable earnings, and increased dividends every year. Some blue chip companies that you might know are McDonald's, Coca-Cola, Kraft Heinz, Facebook, Johnson & Johnson. Those are blue chip companies. You've probably heard broker or individual brokerage account. Well, a broker is someone who buys and sells different assets, stocks, bonds for you. And there are a variety of different brokers out there. My favorite broker or brokerage companies to use would be Fidelity, Vanguard, Robinhood, Webull, and Charles Schwab. Next, you need to understand capital gains and capital loss. A capital gain is when you make a profit on a stock. So for example, you buy a stock for $50, it goes up to $100, you sell that stock, you made capital gains on $50. Or the opposite, a capital loss, you buy a stock for $50 and it drops down to $25, you have now lost $25. Why that's important, a capital gain, you will have to report on your taxes, or a capital loss, you can also report on your taxes. Coming in next is an index fund. You have probably heard a multitude of different people talk about index funds. If you want to retire long term, if you want solid, steady growth, invest into an index fund. Well, an index fund is a type of mutual fund that allows investors, or people like yourself, to buy investments that mimic a certain trend. So for example, VOO is an index fund that tracks the S&P 500. So if the S&P 500 is going up, that index fund will go up. If the S&P 500 is going down, that index fund will also mimic it and go down. Next is an IRA. What is an IRA? An IRA is an individual retirement account. There's two different types of IRA. There's a Roth IRA and a traditional IRA. They have certain tax benefits to them. Next is the Dow Jones, or the Dow Jones Industrial Average. You've probably heard this a lot when people are referring to the stock market. They'll say the Dow is up or the Dow is down, and you might think the general or total stock market is up or down. But what the Dow Jones is it is a group of 30 different blue chip stocks that are price weighed. And coming in last is the S&P 500. The S&P 500 is the Standard & Poor's 500. This is a market index that tracks 500 different United States companies. That's 10 things you've probably heard a variety of different people talk about that you might not know what they are. But wait, there's more. I have a bonus too for you. You have FOMO and FUD. FOMO is the fear of missing out, and that is a very hard thing to get over. When you're FOMOing something, the stock market's going up, you're probably thinking, crap, I'm gonna miss all those gains, buy. Or the stock market's crashing and you're thinking, crap, I need to sell all my stocks and make sure I don't lose all that money. That is FOMO. It's the fear of missing out. And that can be applied to multiple different things in your life. And then there's FUD, which is fear, uncertainty, and doubt. FOMO and FUD are two mindsets you need to be aware of when you're an investor. And that's it. Those are common terms that you're going to hear constantly when people are talking about the stock market and investing that you should be aware of. And hopefully now you are. So if you like this video, please just tap that thumbs up button for me, subscribe for more content, and leave me a comment down below if there's any other terms that you've heard about that you want me to clarify for you. And until then, I'll see you in the next video.